One of the most successful entrepreneurs in America over the past 50 years is going public with his fourth and final prediction about a scenario he calls America's nightmare winter. You've probably never heard of Bill Bonner, but in addition to owning an interest in businesses all over the globe, he also owns more than 100,000 acres with massive properties in South America, Central America, the US, plus 3 large properties in Europe. Bonner says we're about to enter a very strange period in America, which could result in the most difficult times we've seen in many, many years. Bonner has made 3 similar predictions in his 50-plus year career, and each one proved to be exactly right, although he was mocked each and every time. This is why I strongly encourage you to read about Bonner's fourth and final prediction totally free today. It's all spelled out in a free report we've put together about America's nightmare winter scenario. Get the facts for yourself. Go to americasnightmarewinter.com to get your free copy of this report. Even if he's only partially right, it will dramatically affect you and your money. So again, go to americasnightmarewinter.com for this free report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. Today we're talking gold, specifically gold miners. As we're speaking right now, the GDXJ, and gold all down year to year. With me today is Chris Mancini. He's a senior analyst over at Gabelli Funds. Chris, always good to have you on. Welcome back to the show.
Okay, thanks, Daniela. Yeah, happy to be here.
Yeah, well, I should have also added in my intro that last time you were on and previous times you were on, you made headlines with your $10,000 gold call down the line, okay. Not right now. And in the past, you also said that Bitcoin was corrupted and gold was, given to us by God, basically. So we're obviously going to talk crypto with you later on, but
all right.
Let's start by talking the miners here. Obviously, been a very, very difficult 2022 for the juniors, for the mid-tiers, for everyone, really. Can things look up next year?
I think they can. I think that one thing that we're seeing is that inflation hopefully has peaked, the mining inflation. So a big input to mining around the world is energy, and that's in the form of fuel for, obviously, the rolling stock, all the big trucks and shovels and things like that, but also empowering a lot of the processing plants around the world. They use heavy fuel oil and diesel when they're not connected to the grid. And then there are also consumables that use a lot of oil, like explosives, or use a lot of petroleum-based products like explosives. So we're seeing the price of oil has come down from its peak. The other issue is that there are a lot of supply chain issues that were, affecting the worldwide economy, the global economy, which were causing the cost of some consumables to go up. Those seem to have kind of rectified themselves to an extent. So costs of some consumables are declining. And from a labor perspective, although we're not seeing the cost of labor decline, we're hearing that it's not increasing at the same rate that it has been. And the other thing is that from the beginning of the year, a lot of the producing country currencies have declined. So the Aussie dollar, the Canadian dollar. So if you're producing in Australia, for example, and on a U.S. dollar basis, it's costing you less now than it was at the beginning of the year. So that's all helpful in terms of the cost side of things, and then from a revenue side, we just have to figure what's going to happen with the gold price. But there are some good signs in terms of hopefully that inflation's peaked in the sector.
Oh, well, I want to talk about that because in one of your research reports, you write, look, the gold mining industry keeps on plugging along, persevering, and surviving for now. I believe that it's well set up to thrive if and when the gold price turns up again. So, as we're closing out the year here, Chris, we're getting some glimmers of hope for gold. How do you see the price setup?
I think the price setup, it's really interesting. It's really been trading in a range for the past 2 years between around $1,700 and $1,800 an ounce, and it bursts through that 1,800 or say 1,850. For example, when Russia invaded Ukraine, then it went down below when there was a lot of dollar strength, and I think there was a lot of shorting in the futures market in gold as a way to play the strong dollar. And so what the market's waiting for is to see whether or not the Fed raises rates, continues to raise rates, and what happens with inflation, or whether the Fed pivots at some point and starts to bring rates down. And I think that we're starting to see the economy start to weaken a little bit. And if we do enter a recession next year, which I think there is a fair likelihood of that happening, a good probability of that happening, then I think that the price of gold will rally. So I think we're actually entering into a pretty good setup for next year.
So people are going to bring up, but Chris had that famous call of $10,000 gold. Do you still believe in that number and see it down the line at some point?
Well, I mean, the story on that is yes, I do. That's to answer your in short, I do believe in $10,000 gold eventually, but it's going to take a very long time, and that'll gold will hit 10,000 when the market loses confidence in the Fed's ability to be able to manage inflation in the economy, and when we start to see inflation really, really take hold. So I think that right now what's likely to happen is that the Fed is raising rates now. Inflation is, I think, broad U.S. market CPI has peaked. I think we'll start to see inflation decline. But I think we'll also see a recession. And when we see that recession, the market's going to kind of freak out. The policymakers will freak out, and they'll say, we need more QE. We need more stimulus from the Fed. And I think that will happen again. And I think inflation will start to take off again. And so when the market starts to see that this inflation is here to stay, and when the general public, really rich people, start to get scared about what they should do with their cash, that's when gold goes to 10,000.
I like how you said that. And back to QE, and once again,
yeah, exactly.
History repeating itself. Here we are again, folks. But getting back to the miners, because obviously this is your expertise. You travel mines throughout the year. In the past, I know we spoke about how, look, they've done a good job cleaning up their act. I'm comparing to 5-6 years ago. They've optimized operations. They've generated free cash flow. More and more companies, as you know, paying dividends. But do you think that will continue to be the trend, or do you think there'll be a focus shift from paying dividends to generating growth?
Yeah, I think that the dividends are still going to be key. That's really what investors want to see. They want to see organic growth. We even saw with the Goldfields Yamana deal, which will not be consummated, and was a bad deal. Goldfields chose to get current production rather than try to grow their production base. It's an easier thing to do for big companies. It's less risky. So until the market starts to say we want you to grow, I think that the focus is going to be on cash returns, dividends, and near mine exploration.
Well, that brings me to my next point. Let's talk deals. And as you've pointed out, deals have been few and far between. Where have they gone? What happened to the deals in this business, Chris?
I think the deals really don't make sense unless it can be accretive to really the acquirer's shareholders. So, for example, the Goldfields Yamana deal, there were no synergies in that deal. One operated on one side of the planet, the other operated on the other side of the planet. And Goldfields is paying a very big premium to Yamana shareholders. I mean, we were big Yamana shareholders, so we were thankful for that. But we were also Goldfields shareholders to a smaller degree, and their stock got hit really hard. So at the end of the day, we were net positive on it, but not as much as we would have liked. And I think what the market's saying is that you need to be able to show that you're accreting your net asset value. The acquiring company needs to be accreting their net asset value if they are doing a deal, and it's hard to show that.
Can you give us some insights as to what you're seeing in terms of new gold deposits popping up? And we've spoken about how much gold really is out there. Can you give us insights? I mean, are we really drying up here, or what's the situation?
I mean, there are some good, there are some gold deposits out there, but, we own, for example, some stocks where the deposit is good, but it probably won't fly at $1,700 an ounce. Could it go at $1,800? Could it go at $1,900? Yeah. So those are lever types of plays. So, for example, at this point, we own something called Troilus, which has a deposit in Quebec, which is very big. It's relatively low grade, and we think that they're doing things to make it, which will make it economic at $1,700. But currently, as it currently stands, it's probably not economic at $1,700 an ounce. So there are lots of deposits like that, and there are some also really, really good deposits that we think will fly. Like, for example, Osisko Mining's Windfall in Quebec. There's another one that we like a lot called De Grey, which has a deposit in northwestern Australia, which we think will be good. But those are trading at such big discounts that discounts to their net asset values, but they're still big market caps. So, like, the companies are more incentivized to build those themselves than to sell them at big discounts to their net asset values.
So if I were to ask you to grade the health of the mining industry right now, what would you give it?
Like, what's the scale? The scale of like
you could give it an A, a B, a C.
I would say the health is probably like a B.
Okay.
maybe like a B minus.
Where does it need help the most, I guess is what I'm trying to get at.
Yeah, okay. I mean, what I would say is that it is in this position now where it does need to show that it can sustain itself, that it can sustain production down the road. And so it's a good point. I mean, I do think that they should buy some of these smaller development stage companies and build their mines, build their projects. And, part of the problem with that is that, like I said, they don't want to sell. The development stage companies don't want to sell because they're trading at such big discounts. And they need to do a good job of finding more gold. That's another situation. So they do need to be able to show that they can sustain themselves. But they are returning cash to shareholders, and they are focusing on their operations.
Right, but there's less exploration happening, right?
Yeah.
Less of this happening, so that really needs to change. Chris, when I knew you were coming on, I was curious to get your latest thoughts on the cryptocurrencies that we're seeing. Why do I say this? Because years ago when I interviewed you, I mean, when Bitcoin was really just kicking off, you never believed in it. You said it was corrupt. You never liked it. You would never touch it, and you never walked away from kind of that belief system.
Yeah.
So I'm just wondering, looking at Bitcoin right now, down 60% for the year. I know people are disappointed in gold, but gold's down 2%. Your thoughts just now on this whole gold Bitcoin?
Well, I just think, again,
I don't want to say debate, discussion.
Yeah, sure. I mean, what I said to you in the past, like years ago, again, was that the big difference between gold and Bitcoin is that Bitcoin is man-made. So it's like it was supposed to be man-made gold. But the issue with anything that's made by man is that it's going to be corrupt, and it's going to be corrupted because we are humans are inherently corruptible, and that gold cannot be corrupted. Gold was made by God. It cannot be corrupted. God is perfect. Gold cannot be corrupted. It is what it is. And I think that what we're seeing with all this FTX and all these other crazy scandals that are happening is that the corruption has run enormously rampant in this sector, in the crypto sector generally. And although Bitcoin is hanging in there, surprisingly, despite, notwithstanding all of this, all these revelations, relative to the corruption that's taking place at these various exchanges and things, I mean, I think that Bitcoin will be further corrupted, even though it's kind of like the last man standing. When people start to realize that Bitcoin will be corrupted in some way, shape, or form, it will lose more of its value, lose more of its attractiveness, and gold should benefit from that.
Have you seen, with the demise of the cryptos, at one point we were saying gold was getting hit hard by it because we were seeing money flow, out of gold into crypto. Are you seeing anything of the reverse happening yet?
No, no. I think that on the margin, maybe we were being, gold was being hurt to an extent by Bitcoin and crypto. But I do think that some who might have bought gold were going, okay, I'll just buy crypto instead. I think what's happened now, my guess is that those who had crypto and might have sold it are kind of just licking their wounds. I don't think that they're saying, let me sell it and get back into gold. But, sorry.
No. I wanted you to finish your point. Sorry.
Oh, no. So what I was going to say was that maybe what will happen, though, is if gold does have a run here, we won't have that headwind from crypto, if gold does have another run.
Well, I guess which brings me to my final point here, and that I like bringing up, is like, what's it going to take to get gold moving? Investors, there's two ways to look at the gold price this year. Some folks are coming on saying, hey, it's held up great, down 2% for the year, but compared to everything else, gold has done well. Other folks, investors, disappointed in what gold has done for them. My question to you is, like, what's it going to take to get, a rally, momentum, energy back into this space? It was supposed to be a fantastic setup here for gold with the high inflation, with the current, mess on the global economy. Obviously, the war, it should be flourishing here.
Well, I think that the issue is that people still believe that the Fed's going to handle this. It's all going to be okay. The world's central banks are going to be able to handle this mess, like you're saying. And that's reflected in inflation expectations. Inflation expectations never went above actual inflation. So the market always thought that it was all going to be sorted out. And, it does seem like it is, like inflation has peaked. So I think what it's going to take is really a recession. A recession next year, or whenever, but a recession, weaker dollar, unemployment rate going up, and some persistent inflation. And so again, it's kind of the first point. So the recession with persistent inflation will demonstrate that, wait a second, this isn't, the Fed doesn't have a magic wand. And so I think that there's a pretty good setup for, like I was saying, pretty good setup for that next year. And it is a good hedge. Like owning gold, I think, is a good hedge against the potential of a recession next year.
On that note, I thank you, Chris, for coming on. I want to take this time to wish you a Merry Christmas to you and your family. And
Merry Christmas. Merry Christmas, Daniela. Thanks.
We love Christmas.
Yes. Thanks a
I
lot.
hope to see you in person soon. Chris Mancini from Gabelli Funds. Thank you so much, and thank you for watching. We'll have more for you coming our way on the Daniela Cambone Show. Sign up at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.